Welcome to the ASEAN Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor in Singapore. David, great to have you on the show.
Hello. Yes, Brian. Nice to speak with you again.
Now, David, before we get your insights, let's take a look at how markets are performing across the region. Now, if you look at Asia Pacific stocks overall have risen in early morning trade, this morning's trade, because investors in the region reacted very positively to the approval of Pfizer's COVID-19 vaccine. So CDC director in the US, Robert Redfield, signed off on Pfizer's COVID-19 vaccines. Now that allows inoculations to officially move forward for people aged 16 and over. So obviously markets reacted very positive to that. The other positive news was the fact that the Bank of Japan's quarterly Tankan survey showed that business sentiment in Japan actually improved in the 3 months to December. So how are they trading right now? We've got the Nikkei trading at 26,791.58. Now it's up 0.52%. Shanghai Composite is trading at 3,360.48. It's up 0.4%. Hang Seng is down 0.1% at 26,480.36. ASX 200 is trading at 6,681.1. It's up 0.58%. The Kospi is down marginally at 0.04% at 2,769.03. Now closer to home, the Bursa Malaysia is trading at 1,693.72. It's up 0.54%. But the SGX is up significantly at 1.4%. It's at 2,861.17. Now, David, so I've got to ask you that this question about digital banking license in Singapore. Now, last week, 4 licenses were awarded. What are the implications to investors?
Well, I think the implications are quite positive, Brian. I think they're positive on a number of areas. The first one, of course, is that I think it is going to introduce a little bit more competition here in Singapore. As many of your viewers will know, previously, the Singapore 3 big banks, DBS, UOB, and OCBC, have been the gorillas in the market, with DBS being the biggest gorilla out of the 3. And it has almost been in control of the Singapore market. So I think introducing some kind of competition is actually quite healthy, not only for the banking sector, but certainly for consumers as well. That is not to say that there wasn't competition previously. I think we've always had competition here in Singapore, but what we are going to have now is these new digital banks coming in with new innovations. And I don't think we can actually say that any of the 3 banks, DBS, UOB, or OCBC, were never at the forefront of digital banking. I think DBS in particular has been pretty ahead of the competition in terms of introducing digital banking here in Singapore. But I think what was lacking really was innovation. And I think with the new banking licenses coming into Singapore, what it could do is to introduce new ideas. And I think in the case of DBS, Piyush Gupta, the CEO, has already said that he is actually watching the development of these new digital banks and to see what they are capable of introducing. If they do something new, then I think what will happen is that the 3 existing banks will try and copy it. But ultimately, I think what will happen is that there will be some kind of churn. I mean, I, as a banking investor, I'm quite happy with DBS. I'm pretty happy with HSBC and their digital innovations. But I think what will happen is that if one of these new banks that are starting up, in the case of something like Singtel together with Grab, or maybe C Limited, which is another company that has received a banking license, if they come up with something that is interesting, that makes me go, oh, wow, I never thought that could actually happen, then I think, I'll be tempted to try. So it's kind of a churn rather than anything else.
Because after all, David, Singapore is a very small market.
Yeah.
It's probably a great test bed, and I'm sure that some of these players are looking at Singapore as the proof of concept market before they roll out their businesses throughout the region. Grab, for example, is also vying for a digital license in other parts of the region, Malaysia being one of them. I think Malaysia is the one that next that is scheduled to then issue new digital banking licenses. So it'll be interesting to see in a Singapore context, it's more about churn. But once they get their model right and the offerings right, in emerging markets, the Indonesias, the Malaysias of this world, the Vietnams, it will be about new customer acquisition because after all, there's a large population of unbanked.
Oh, I couldn't agree with you more. And I think ultimately it is really using Singapore as a kind of test bed. You've got to get things right, particularly in a population where you only have about, say, 5.5, 6 million people. If you can get that right, then of course it is easy to move forward to the rest of Southeast Asia. And I think the implications aren't really so much for Singapore, but it's actually where you are at the moment, Brian.
Yes.
That it could actually sort of be disruptive to the likes of maybe Public Bank or even Maybank, CIMB. It could actually be more disruptive for you than it is for us. So you should be looking to see what is going on here in Singapore rather than to say, what are the implications for us in Singapore? We're reasonably happy at the moment, Brian.
You know, and curiously enough, you said Public Bank because Public Bank in the market is seen as under investing on technology. You know, they're notoriously frugal bank. Financially, they've done very, very well. But then we've all seen the likes of Nokia and how you've been disrupted. You know, when you're at the top of your game and suddenly you're knocked off your perch, these are going to be interesting developments. But David,
I couldn't agree with you more. I used to be a hardcore Nokia fan. I loved my Nokia phone. And then one day I went to the shops and I said, I want to upgrade my phone. And they showed me a range of Nokia phones. And I said, you know what? I don't like any one of them. And for the first time ever, I moved from Nokia to Apple. And I think that really is the point that we should be making, which is that in the case of Public Bank, sure, it is important to keep your costs as low as possible in order to satisfy investors. But you shouldn't really be looking only at shareholders. You should be looking at your end user, your customers. And if your customers have a better experience somewhere else, then of course you're going to lose them. And no matter how much cost you cut, it is not really going to actually sort of benefit your business because your customer base is shrinking.
Now, David, moving away from the Singapore banking to currencies. Now, the US, what's your view on the US dollar against Asian currencies in 2021?
Okay, I think there's a couple of issues here. You know, first of all, America is definitely the largest consumer nation in the world. It outranks the European Union, it outranks China, it even outranks Japan in terms of consumption. So in order to pay for that consumption, and America likes to import goods from outside. America likes to buy goods from Southeast Asia, from China, because it's cheaper than what it can produce in America. So in order to pay for those purchases, the Treasury has to continually print more money in order to finance those purchases. So that is going to put pressure on the US dollar. And then secondly, we have the budget deficit. America is going to be nursing a budget deficit for quite some time simply because its economy needs help. And then thirdly, we've got the Federal Reserve saying that interest rates are unlikely to go up in 2021 and maybe even 2022 before interest rates will start to rise. So you've got these three pressures on the American dollar. First of all, the need to print money in order to finance the purchases of consumer goods. Secondly, they need to print money in order to finance the budget deficit. Then you've got the interest rate differential between America and the rest of the world. So I think the outlook for the US dollar is that it is going to start trending lower in 2021 and maybe even until 2022. So I don't think the outlook is that great for the US dollar because it won't be able to increase those interest rates in order to draw the money back into America again. But it's not such bad news for American companies. If you have a look at US corporations, many of them have overseas operations. So they have operations here in Southeast Asia and the rest of the world. Now, if the US dollar is low, It means that when they translate their earnings, their profits back into US dollars for their profit loss accounts, it will actually flatter the profit loss account.
Yes,
and so consequently, when we look at American companies, it'll look as though that they're making more profit simply because the US dollar is lower. So you have this two-way pull. The dollar will be going down, but I think US corporations will be making more money.
Now, David, you're a long-term investor. What are 3 long-term stocks you'd be looking to add to your portfolio in 2021? And that maybe is linked also to what we just talked about in terms of earnings for US companies.
Yeah, well, currently I manage a range of portfolios and I have about 100 different stocks in there. So I'm watching 100 different companies. The chances of increasing the number of stock holdings that I have is probably fairly minimal. But what I will be doing is to start adding money to my existing shares. And the ones that
are you accumulating then in that case?
Exactly. I think it is what they call in the trade accumulation rather than introducing new stocks. And the ones that I like, Brian, are consumer-facing stocks. I like those companies that are supplying goods and services to consumers. And there are so many of them. But some of my favorite ones are things like Starbucks, for instance. I think Starbucks is going to continue to expand, and Starbucks has a huge operation outside of America. So when all those earnings are then translated back into the US dollar, I think Starbucks will look quite attractive. The other ones that I like are the things that we have to buy continually. So I'll give you 2 in that sector. One of them is Unilever, which is an Anglo-Dutch company in the UK, but they have a listing in the US, but they also have huge operations. You can't go into a supermarket without sort of coming across some kind of product that is made by Unilever. Another one is Procter & Gamble, a big rival to Unilever. And of course, again, if you look at your kitchen sink, you look under the cupboard, you'll find some kind of Procter & Gamble product in there, which therefore means that once you've actually used up your soap powder, you're going to have to buy it again, Brian. So I love those kind of companies. And if you're looking for something maybe a little bit wacky, I would look at 3M, for instance, a very innovative American company that has done well recently because of the N95 masks that they make. But ultimately, when you have a look at 3M, they make so many products, from things like Post-it notes to things that you have to use to stick up pictures on walls and things. And I like that company simply because of the way they operate and the innovation that they have. So I think those will be 3 companies that I will probably be adding to in 2021, primarily because they are consumer products. Once you've actually used them, you have to go back and buy some more, including that cup of Starbucks cappuccino.
David, thank you very much for your insights. We've been speaking to David Kuo, the founder of the Smart Investor in Singapore, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.